Good morning and welcome to Stock Market Today. It's Wednesday, June 5th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email to follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. U.S. equities finished solidly higher in Tuesday's trading, closing near the best levels of the day. Turnaround Tuesday, we'll call it. Investors keyed in on comments from Fed speakers, which are interpreted as signaling a willingness to be flexible as it relates to rates. Technology, materials, financials, and consumer discretionary were leadership. Defensives lagged, with REITs closing lower. Treasuries declined across the curve. Dollar was little changed against the yen, weaker on the euro. Gold finished up 10 basis points. WTI crude added 40 basis points on the day. Again, your outperformers, tech, materials, fins, discretionary, throw industrials on that list as well. Underperformers, REITs were the only group to finish lower, but utilities and staples also underperformed. As we get to the desk this morning, futures are following through to the upside, up 70 basis points. Asian markets were mostly higher overnight. Japan up more than 1.5%, but China did lag. European markets are gaining as well. Treasuries are mixed. The dollar is stronger against the yen, lagging on the euro. Gold up another percent. WTI crude off 30 basis points. So what do we have? We had a near test of support at the 2720 level on Monday before turnaround Tuesday takes us back above the 200-day moving average, led by technology stocks, and now we are bumping our heads on the bottom of the resistance zone between 2800 and 2850. Support still near 2720, then below that at 2650. All eyes on RSI for a shift out of bearish ranges. That's how I see it. This rally is great, but until we get some momentum behind it, it's merely counter trend in nature. What we want to see is breaks through resistance as the RSI shifts back into bullish ranges. That is what we're looking for now to get super bearish, to get super bullish, to give us conviction that we are likely to break out of this consolidation that we have been in for over a year. Market's really gone sideways. If you ask me what the trend is sideways. Chaikin money flow is currently bearish, so the indicators are not there yet. Now, we are going to see some follow through here today, and that's great. We do need to see the indicators start to get in gear. Otherwise, we remain in the chop. Turnaround Tuesday led by tech was a nice start. We'll see if we can get further follow through here this morning. Your market in a minute. What am I writing about today? My note to Chaikin Analytics clients. Fed speakers hint at flexibility, prompting turnaround Tuesday for stocks. We just heard about it. Battered technology shares outperformed while defensives lagged on the day. Financials are finally seeing relative strength to match their fundamentals, and we'll get into what that means in a little bit. Sentiment indicators are actually still more fearful than greedy despite the strong move yesterday. And futures, as I said, do point to a higher open today. Some repair work done on the power bars for the major indices. Dow Jones is still bearish at 5 bullish stocks to 6 bearish stocks, but that's much better than it was the previous day. S&P 500 actually snaps back into a bullish positioning, 99 bullish or very bullish stocks, 85 bearish or very bearish stocks. NASDAQ, 17 to 20 bulls to bears. Small caps, second day in a row of outperformance, something we're going to watch. 411 bullish or very bullish stocks, 391 bearish or very bearish stocks. So a mixed bag here across the board, but a lot of repair work done yesterday. Bonds, some profit taking in the bonds. And for those of you who read my weekly market survival guide note, you will have noticed that I closed our long position in treasuries, IEF, yesterday morning. Head over to ChaikinAnalytics.com for more details on the survival guide. Technology had a great day yesterday, up 3.34%. 15 bullish or very bullish stocks for 12 bearish or very bearish stocks. We'll get into that a little while, but remember, we looked at tech yesterday. We said it was on support, and if it was going to rally, this was the level. We highlighted XLK in our note to Chaikin Analytics clients yesterday morning. According to the Chaikin Power Bar, small cap stocks and large cap stocks have turned somewhat bullish. Major markets are mixed. Stock of the day today, MGIC, MGIC Investment Corp. It's an insurance company. It's an area where we've been pounding the table on the bullish side. Closed at 1404, up 2.5% yesterday. MGIC, ticker MTG, has a very bullish Chaikin power gauge rating due to very attractive financial metrics, very strong price volume activity, very positive expert activity, and strong earnings performance. 20 factors, 5 in each of these 4 categories give us a very bullish rating. Very bullish stock, strong trend, strong industry groups. We know this is the right hunting ground. Type of name we want to consider. Market and model are in agreement. Dynamic duo are in gear. Very bullish rating in place since January, outperforming since that time. Intensity of outperformance picking up. Chaikin money flow predominantly bullish since the beginning of the year. The one concern I have is that we are closer to overbought than oversold. Now, the pullback tested the rising long-term trend line, and we triggered a buy signal here today. Money flow buy signal. So a couple ways to think about this one. The more aggressive traders take the trade. I think this looks compelling. More conservative investors wait for an oversold condition, but realize you might be buying higher. That's okay. Or split the difference. No one says you have to buy your full position here and now. Maybe buy a partial position here and buy the rest when the stock is oversold. Or maybe look to the options market. Look for a bullish call spread to take advantage of upside while limiting your capital outlay should the stock decide to move to an oversold position. A lot of different ways to skin the cat. We try to help you as best we can, but ultimately it comes down to your style. Sector tracker now, moving to the major sectors over the last 5 days. Materials, industrials, financials, healthcare, staples. A lot of positive on the screen. Big day yesterday will do that for you. Comms continue to be underperformers, as does technology, right? That just shows you. Even after that monster move in tech, yesterday, still down over the past 5 days. Remember yesterday? Remember we highlighted materials and said we need to start paying attention? Start paying attention. Start looking for the bullish and very bullish stocks within Chaikin Analytics, within the materials group that have shown some relative strength. There could be some opportunities there. Energy, on the other hand, continues to not look great. We want to see tech getting gear. Real estate and utilities, obviously we'd expect them to give some back with yields backing up. Our industry in focus today, Dow Jones REIT services. Over the past 6 months, subsector it's been an inline performer with the S&P 500. Its power bar ratio, which measures future potential, is weak. 16 bearish or very bearish stocks. 12 bullish or very bullish stocks. It ranks in the middle of the road, 10 of 21 subsectors that we track, and it's moved down 4 slots over the past week. Now, this one for me is kind of interesting because it's a bit of a mixed bag, and I'm going to show you why. Some of the indicative names that are very bearish, I think you have to be selective with your stocks in REITs now, right? I don't think you can, right now is not the time. Right? In a really defensive market, you just buy REITs. Buy the group. Protect your portfolio. That's worked out. Now, what we want to do is get selective because there are different types of REIT stocks. There are REITs that are levered to retail. Do you want to own a mall REIT? Probably not. There are other REITs that are levered to healthcare, probably better bets, right? Names like Seritage, SRG, I know are levered to retail. Very bearish rating. UDR, very bearish rating. And Acadia Realty, AKR, very bearish rating. Those are the ones you want to avoid. But look at the RWR, the SPDR Dow Jones REIT ETF. It has a bullish Chaikin power gauge rating for the ETF. Still in an uptrend, still outperforming the market over the past 6 months. Right? It's a mixed bag. Money flow has kind of turned bearish. That's what I mean. It's a mixed bag. You have to be a little bit more selective in the REITs now. And importantly, you have to know what you own if you're going to look at REITs. You need to know that you own a mall REIT when retail is under tremendous pressure due to the internet. Sift through the holdings of the ETFs. Isolate the bullish and very bullish stocks that have outperformed, and those are the ones you want to own. It's time to get a little bit more selective in REIT land. Looking at what's trending now, yesterday's S&P 500 gainers and losers. Lot of moving parts from Mattel. A little bit of a thawing as it relates to Mexico helped Mattel. Mattel's being added to the mid-cap 400. That helped. They also signed a licensing deal for Hello Kitty. All of that combined sent the stock up nearly 12%. Wynn A little bit of a counter trend move here as some of the Macau-related names rebounded. That's going to help MGM as well. Win up nearly 9%, MGM up nearly 7.5%. Xerox is extending a partnership with Hewlett-Packard. That sent that stock higher by 7.5%. And I did not see any real news on Whirlpool, WHR, to send that stock higher by 7.25%. On the loser side of the board, Nectar. Nectar was a big gainer the previous day, up over 8%, so seeing some profit taking yesterday. VTR priced a secondary yesterday, sent that stock lower by 3%. HCP didn't see any real news to account for a 2.5% plus move lower in that stock. MKC, this is why we are trend followers, 52-week low. The weak tend to get weaker. The strong tend to get stronger. WELL, didn't see any real news on that one to send it down by 2.5% on the day. Financials, I'm asking the question here. Relative strength, is it catching up with the fundamentals? And the reason I ask is because for a while, financials, from a sector standpoint, have been one of the top, 1, 2, or 3 sectors as ranked by the power bar ratio. And coming into today, financials have 33 bullish or very bullish stocks for only 1 bearish or very bearish stocks. That means within the Chaikin Analytics 20-factor model, 33 stocks are bullish or very bullish. And remember, that model is predominantly fundamentals. So here we have the fins moving sideways. Nice rally yesterday, breaking this near-term downtrend. What's interesting to me is that the RSI has not become oversold on recent declines. Could we be seeing a shift to bullish ranges? Most recent rally actually produced an overbought condition. First time in a year that it produced an overbought condition. If we can get this RSI to shift higher, financials to continue to move up, here's XLF relative to the S&P 500. Now we've broken the near-term downtrend line. This longer downtrend line is still in play. But financials have been a group where the fundamentals have been good within our model for a while, but the relative strength just hasn't been there as a group. I think it's time to go looking for ideas within the financials. Now, we've been highlighting insurance, pounding the table on insurance. It's time, I think, to start broadening out that universe of financial stocks. Start looking to the bullish and very bullish power gauge rated stocks that have held up as the market has come under pressure through the month of May. Those are names to consider on the long side of your portfolio. Technology held where it needed to for now. Remember this chart from yesterday? Tech relative to the SPY. Pull back to this broken downtrend line, just above the 200-day moving average. Sharp rally. Outperformed yesterday. Remember we talked about the RSI never became oversold. That's going to become important if we start to move higher. On an absolute basis, we held above support at the $70 level. Right now, odds favor a continuation of this move of outperformance. That could change tomorrow, right? We adjust our probabilities as the facts change, but right now, odds favor outperformance continuing. Very bullish and bullish names within the technology space that have held up, that have shown relative strength. That's where you want to go looking for long ideas. Bearish sentiment eases but remains element. What we're looking at here is a little bit of a different chart that I normally show on Wednesdays, right? I do sentiment on Wednesdays. This one I'm looking at the equity only put call ratio. Similar takeaway, but this is just stocks. And what we can see is we're easing, but bearish sentiment still elevated. When this ratio, and this is the 13-period moving average of the ratio, kind of gets towards the 0.8 level, that's a sign that a near-term bottom is likely taking place. So just something to keep an eye on. Sentiment does still remain bearish. Honeywell is a stock I'm highlighting today as my bullish stock of the day. Very bullish stock, strong trend, strong industry group. Market and model are in agreement. Dynamic duo are in gear. Stock is oversold with bullish money flow and triggered a relative strength buy signal today. I like Honeywell, and I feature it as my bullish stock of the day in Chaikin Analytics. And I've referenced my market survival guide. Head over to chaikinanalytics.com/survival-guide for details. Once a week, a big in-depth note showing you across asset classes and across global markets where I see the opportunities. I'll be back here tomorrow. Have a great Wednesday, everyone.